Let's talk about borrowing and lending money. For centuries, banks controlled the process. Slow approvals, endless paperwork, and high interest rates. If you wanted to earn, you'd put your money in a savings account, but the bank kept most of the profits. Now, imagine a world where you are the bank. Enter crypto lending. Get a loan in minutes, no credit checks, no middlemen. Cryptocurrencies like Bitcoin and Ethereum run on decentralized blockchains, cutting out banks entirely. Crypto lending platforms connect lenders and borrowers directly. Lenders deposit crypto, borrowers use their own crypto as collateral. The process is automated, transparent, and always open. Meet Sarah. She wants to earn on her idle Bitcoin. Mark needs cash but doesn't want to sell his Ethereum. Sarah lends her Bitcoin. Mark borrows using his Ethereum as collateral. The platform's automated system ensures both are protected. No banks, no gatekeepers, just a new way to move money. This is the future of finance. How does crypto lending work without a bank? The answer: smart contracts. A smart contract is code on the blockchain that enforces agreements automatically. Think of it as a digital vending machine. Deposit collateral. Get a loan. No paperwork, no negotiation. Mark wants to borrow $5,000, so he deposits $10,000 in Ethereum as collateral. This over-collateralization protects lenders from crypto's price swings. The smart contract locks Mark's Ethereum until he repays the loan plus interest. Sarah, the lender, deposits her Bitcoin into a pool with other lenders. Mark borrows from this pool, and the interest he pays is distributed to all lenders. The smart contract handles everything. No chasing payments, no middlemen. Lenders see their interest accumulate in real time. Crypto lending platforms have lower costs than banks, so rates are better for everyone. The spread between what lenders earn and borrowers pay is much smaller. Efficiency, transparency, and automation. This is the power of smart contracts. The middleman is gone. Code runs the show. Why are people turning to crypto lending? High yields. Traditional banks offer less than 1% interest. Crypto platforms can offer 5% to 12% or more, especially on stablecoins. For lenders, that's real passive income. For borrowers, crypto lending is fast and accessible, no credit checks, no paperwork. If you have crypto for collateral, you get a loan almost instantly. This opens up financial access to millions who banks ignore. Flexibility is another draw-repay loans on your schedule, not the banks. You can unlock cash without selling your crypto, so you keep your investment upside. Crypto lending is global and always open. No business hours, no borders. Anyone with internet can participate from anywhere in the world. No gatekeepers, no discrimination. It's a financial system for everyone, not just a privileged few. The promise: more opportunity, more freedom. That's why crypto lending is booming. The future of finance is open to all. But crypto lending isn't risk-free. The biggest risk: volatility. If your collateral drops in value, you could be liquidated and lose your crypto. For example, if Mark's Ethereum crashes, the platform sells it to cover his loan. Platform risk is real. When you deposit crypto, you trust the platform's security. Hacks and thefts have happened, sometimes with no recovery. Some platforms have failed, freezing withdrawals and locking up user funds. High yields can mean high risk. If it sounds too good to be true, it might be. Regulatory risk is another concern. Laws can change fast, shutting down platforms or changing tax rules overnight. The crypto world is still the Wild West. Uncertainty is part of the deal. Always research platforms before depositing funds. Understand how they generate yield and manage risk. Never invest more than you can afford to lose. The rewards are real, but so are the dangers. Be smart, be cautious. Ready to explore crypto lending? Start with research. Decentralized platforms like Aave and Compound run on smart contracts and community governance. Aave offers a wide range of assets and innovative features like flash loans. Compound is known for simplicity and its co-MP governance token. Centralized platforms offer customer support and insurance, but you trust them with your funds. Each option has trade-offs: control versus convenience, risk versus reward. Crypto lending is a new frontier, exciting but risky. High returns are possible, but losses can be devastating. Always do your own research before investing. Read about the technology, understand the risks, and start small. The future of finance is here, but it's up to you to navigate it wisely. Don't risk more than you can afford to lose. Crypto lending, opportunity and risk, side by side.